Good morning, traders from each and every part of the world that you're joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM, you are number one broker in Kenya and beyond. This is going to be a pre-recorded YouTube video to mean that you could visit the HFM YouTube channel at HFM Kenya. Kindly like, subscribe, and click on the notification button so that you're not left behind on future content that we post from time to time to add value and give support as you grow in the financial literacy journey. So I'll give a unusually 5-second moment of silence for us to do that. Very nice. With now that out of the way, we move forward to, if I can be heard, we move forward to speak about fundamental analysis, which moves the market, tells us the economic health of a particular asset, a particular country, that we can use to tell the various economic health of a country, and that can be translated to different asset classes to allow us maneuver the financial markets. Then we move swiftly to technical analysis of the charts to see the actual data being printed to reflect the significance of the same. So with that said, last week was an inflationary week for us. We saw quite a number of inflation data being printed, CPI, PPI, and we saw something which is quite unusual, at least for the year 2024, where we saw CPI coming out warm, to mean that its impact on the market direction was not quite significant as anticipated. But a day later, we had PPI coming out higher than expected, strengthening the dollar. We further saw quite a number of banks adjust their interest rates. We saw the Swiss National Bank, or the SNB, cut their interest rates by 0.5 basis point to suggest a dwindling economy. So they did that to allow people to borrow more money, banks to borrow more money, citizens, investors to borrow more money, which will in turn create investment and job opportunities to strengthen the economy. Now, the Swiss National Bank is quite familiar with giving us data which comes out as a shocker, and this was quite unexpected at the high cut rate, but they did it anyway, which is going to affect the CHF movement. We later saw the European Commercial Bank also cut their interest rates. Very nice. And we also reflected a struggling employment or labor sector in the United States, which gave us mixed reaction, but finally the PPI gave us some sense of impetus or market direction in strengthening the dollar. Moving swiftly, on Friday, we saw weak GDP numbers coming from Britain, if you may like, which weakens the Great British Pound. They came out at negative 0.1%, which is lower than what was expected at 0.1% in the month of October. And remember, also in the month of September, the earlier month, we had the GDP month-on-month for the month of September coming out at negative 0.1%. So this number of negative 0.1% is lower than what was expected, and we know that we translate that as a weakening or struggling economy having a bearish effect on the Great British Pound. Early today, during Sydney session, we had the Judo Bank Manufacturing PMI, which came out negative, printing at 48.2, with the anticipated at 50.2 and the previous as 49.4. So this will give much more dovish or bearish trend to the Australian dollar, or Australian index, if you may like. So with that said, we move to the chart. Beginning with gold, we observe that from the daily time frame, we broke above the key level at 2689.79, and because of the positive news of the US dollar which came out and less geopolitical activities affecting the move of this precious metal coming out, so the positive economic data from the United States carried the day, which printed bearish candles on the day of Friday. And if you go to a lower time frame of the 4 hours from the daily time frame, we see much more direction in the bearish trend. We shall be monitoring new data coming out, but as it stands, that is the current gold trend. However, we see some sort of reaction from this higher time frame trend at 2642.40. We would want to see the lows being taken out even from a much more lower time frame like the 1 hour, to suggest price movement to the downside and not to be quick getting in for buys. Remember guys, when we marry fundamental analysis and technical analysis, tradings become much more lower risk trades, which gives us a much more longer span in the financial markets. With that said, on JPY, we know that the Bank of Japan has of late, last month, printed some data where we see the Japanese yen seeing notable appreciation overnight, with the USD JPY dripping below the critical 155.00 level. The movement was spurred by comments from the Bank of Japan Governor Kazuo, who avoided providing a definite stand on whether the central bank might pivot its policy. We see the governor of the Bank of Japan not being clear on whether the Bank of Japan will change its policy in the December meeting, which is happening sometime this month. However, the bank manager projected heavy forthcoming economic indicators, leaving the markets to navigate an environment with speculation above the potential for earlier than anticipated monetary tightening. So, which gave us the reason to get in for the bearish trend. That is sometime last week, but one. But currently we see that we're in a consolidation where price is never moving up or down, reflecting the uncertainty that I have just mentioned. Would want to see price break above to suggest the continuation of the bullish trend. However, we know that the data which has been printed from Britain, which came out on Friday for the GDP of Britain, the general economic health, was negative. So to see a reflection of that, if we go to a much more lower time frame, we want to see the lows being taken out and a break of this consolidation right here, where price is neither giving us highs or lows to suggest market direction. From there, we could get in for sales once the lows are broken, or alternatively for buys once the highs are broken, with a favorable risk to reward ratio to experience profitable trades. For USD CAD, from the daily time frame, we see that we're still printing price much more higher. We called this out some time back, the break of this high. The last time we were doing this, the series of the daily morning market call, it had not broken. Said once it breaks, we get in for buys. For those who adhered to this and got in, I hope you are enjoying the results of the same. If I go to a lower time frame to see exactly what is happening, we see also some sense of consolidation. Possibly the market taking a little bit of uncertainty for the festive season. This might not be the case as we walk into Christmas. Much more purchases are going to be made, giving us retail traders speculation to move the market in either direction. Because the market does not sleep, opportunities will always be printed. We want to see a break above to continue of this trend at 1.42450 to show price moving to the upside. And remember, guys, the data coming from the United States is suggesting a stronger USD, which is having a field day on the Canadian dollar. Now, for USD JPY, we see we closed with a bullish candle on Friday, and now we are printing even much more higher, suggesting a bullish trend due to the recovering economy of the United States. We want to see the highs being taken out. For clear market structure, we want to see price coming in close above the 153.960 to suggest price movement to the upside to enable us enjoy the direction of the trend in that direction. For USD CHF, from the daily time frame, we see that we are retesting the 0.89469 like we did a number of days ago, 1.5 weeks ago. We want to see price coming and printing above it to suggest this the strength of the US dollar. But remember, the Swiss National Bank (SNB) cut their interest rates, which would allow people to borrow cheap money, increasing money circulation, which is going to have a medium term of economic improvement. So, to mean if you go to a lower time frame, if the lows been taken out, major lows in this instance, because we know the dominance of the US dollar, would consider getting in for buys, for sales, beg your pardon. And a close above the 0.89474 to suggest price movement to the upside. For US dollar base currencies, quote currencies, sorry, with the US dollar coming in second, we see for Australian dollar AU against the US dollar, we are currently retesting the 0.63590. We'd want to see price print below to support the narrative of the US dollar economy recovery and the Australian economy weakening, as per the data printed this morning on the Judo Bank Manufacturing PMI. For GBPUSD, from the daily time frame, we see we are testing the 1.26209. Want to see price close below. If I go to a lower time frame to see clearly what is happening, want to see the lows being taken out to support this bearish movement to the downside, supported by the US dollar strengthening from inflationary data which came out last week, and the struggling Britain economy. which can be reflected from the general health printed on the GDP, that is on Friday. For Euro USD, we see that we were in a bearish trend from the daily time frame. If I go to a lower time frame to see clearly what is happening, we would debate that we are in some sense of consolidation and we want to see the lows being taken out to support the narrative of strengthening US dollar. But the European Central Bank also cut their rates last week, so we might be seeing a little bit of pull and push in this currency because both economies are struggling to stay afloat. So much more of consolidation here, and we want to see either the highs being broken or the lows being taken out to suggest a market direction in that regard. So, as a disclaimer, this is not by any chance financial advice. This is made for education purposes only. Kindly visit the hfm.com platform and register for an account for you to get in touch with our experts. Until another day, remember to observe risk management and trade with a reliable broker. Until then, keep safe, take care, and God bless. Thank you.